Okay, I'm going to share something with you that I've known for years, but I haven't talked. Well, I've talked about it a little bit. I've told everyone in the past, for what it's worth, for what it matters, that my goal with digital currencies was always just to get more metal. I've said that from pretty much the beginning. That's always been the purpose of it. And I want to talk about a little how the era of cryptocurrencies now. I'm not saying it's ending or it's going to end, but I'm saying that it's becoming a bit unsettling. So forking of digital currencies by anyone reveals their ultimate flaw. Digital currencies can be forked by anyone into infinity as many times as they want, as many times as they desire. They can continue forking these digital currencies, creating new ones. There may be only 21 million Bitcoins, but there are an infinite number of digital currencies that are possible to dilute the ecosystem. And why could this be an alarm? Why could this be alarming from an investor's perspective? Because forks are almost always technically superior to the original currency. So the reason that people are getting into digital currencies in the first place is because they have some type of superiority over traditional government issued fiat currencies. That's why they're getting into digital currencies, because they are algorithmically hard capped on their issuance. However, forking is not controllable. Forking is not hard capped. And so what happens is the original reason that people got into digital currencies is because they're technologically superior to the current government-based fiat system. You may infer logically that due to this original idea or this original reason for getting into cryptos, that once a new technologically superior crypto comes out, that a person may be obligated to upgrade. And upgrading forces a person to jettison the old network and adapt to the new one. This causes capital outflows and a plummeting in price of the original technology. That is the nature of cryptos. The technological features of a crypto are what made it desirable in the first place. Therefore, to remain logically consistent, a person must always consider upgrading to the new tech, because that's why they're there in the first place. I'll give you an example right now of this rising system called Polkadot. Ethereum is obviously struggling. It's a struggling platform. Polkadot is probably technologically superior. Ethereum is worth more than $10 billion, maybe $40 billion at this point. For people who are involved with Ethereum to remain logically consistent, it seems like they should be upgrading to this Polkadot network because it's going to have faster throughput times, lower transaction fees, all these kind of things. How can something like Ethereum function long-term as a viable financial platform when its competitors, when its forks, not that Polkadot is a fork, but when its competitors are constantly beating it from a technological standpoint? And isn't the technology why people started using these platforms in the first place? Once the technology becomes obsolete, does the financial incentive to invest not also become obsolete? Logically, if a currency is released with better technical features, the old currency should be abandoned, because better technical features is the reason that the crypto technology was adopted in the first place. I think this is probably something that all cryptocurrencies will go through. As such, price stability is unlikely to ever be achieved, because there's always going to be this ebb and flow of money into and out of these technologies as new ones come and old ones go. Something better will always be revealed. Something better is always revealed. Does that not mean that your money is better placed with the new technology? Wasn't that the point of getting into crypto in the first place? If some semblance of price stability is ever achieved, how can the asset ever become money or a store of wealth if people are always worried that the asset is going to be superseded in the very near term by superior technology? It doesn't make a lot of sense. Money doesn't work that way. Money is supposed to be something that can pass along from generation to generation, not something that is constantly to be watched out of fear of it going to zero. How can a forked digital currency have value, real value? How is that any different from someone going into their office, printing bills that they've designed with their own custom logo, and handing those bills out, claiming that they have value? How is forking a digital currency any different than going into your office and printing bills yourself? The answer that most people will give is because this new cryptocurrency ensures algorithmic scarcity. But there's no scarcity at all in reality. It's only a pseudo scarcity, because then that currency can then be forked again, and that next fork can be forked, and they can be forked into infinity, causing another round of dilution for all who are invested in the cryptocurrency space, because a lot of the investment that's going into these forks is coming from the cryptocurrency space itself. This is why Bitcoin struggles to make new highs. It's because there's always a better get-rich-quick scheme out there to jump on board. Dilution of the crypto markets negatively Dilution of the crypto markets negatively impacts its unspoken promise to make people rich quick. That is the killer app of crypto is to get rich quick. And this dilution negatively impacts that. As the dilution becomes more and more apparent, people could become more disillusioned, though I doubt that the system will collapse. A lot of people claim that eventually cryptos are going to collapse, everything's going to zero. I think that's very unlikely. Most people are not most, but a lot of people are inherently too preoccupied by their day-to-day lives to think deeply about these topics. And there will probably always be a flood of new people that are looking to get rich quick, just as there's always a flood of people that are getting in on the newest penny stocks. There will probably always be new people to get in on the latest fork that someone made in his office, because that's what this is. This is just someone going into their office and printing off dollar bills and pretending they have value. Other people believe it has value, therefore it does. I've known about this for years. This is not new information that I'm talking about today. This is all things that I figured out about probably 5 years ago. The reason that I'm talking about it today is because the purpose of all of this, and the purpose of everyone who's investing in cryptos, period, is they want to get more dollars. Well, my opinion was always that the ideal would be to collect more real assets, farmland or whatever, pennies, nickels, if that's your thing, something real, right? And I'm getting to a point now where I'm starting to get a little bit worried about this prospect. And it was mainly triggered recently by the biggest news of the decade. Warren Buffett has started buying gold miners. I've studied for many, many years the financial system, and I've always known that the systematic destruction of the dollar has always been mathematically inevitable. It's just been a question of how long can the can be kicked down the road, and how long can the casino keep going? How long can the carnival actors keep dancing? It's always been a question there. This year, with this virus outbreak, at first, silver dropped terribly. Gold dropped a little bit, but then after that, they started going up a good bit. And it seems at first I thought maybe this was just a temporary reaction to the virus. That maybe this isn't really the start of what people have been predicting for so many years. But it never stopped. And not only has the pumping never really stopped, the government's reactions are becoming more and more outlandish. The Federal Reserve recently announced that they would target a greater than 2% inflation rate in the real economy. This means that they're going to print as much money as necessary to avoid deflation. The writing is on the wall now. People like Jim Rickards and Peter Schiff and Jim Rogers and Mike Maloney, dozens of other people have been talking for a decade, more than a decade, some of them 2 decades. They've been talking about the inevitable collapse of the US dollar. And if you followed them long enough, you may have become disillusioned and believed that their predictions might not be something that would occur anytime soon. Well, this year has changed that. This year has made it very apparent that everything that they've been predicting, for the most part, seems to be playing out right before our eyes. Peter Schiff, for the longest time, he predicted that there would be QE4. And when he said that, people ridiculed him. They talked about him like he was a maniac. And lo and behold, the Federal Reserve ended up launching a new round of quantitative easing. In addition, as he predicted for years, the government has started issuing helicopter drops of money to citizens in the form of quote unquote stimulus checks. This was all predicted years in advance. And every week that goes by, there are more and more signs that this end game is really starting to play out. Now, will these events unfold in the next week or the next month or the next year? I don't know. Maybe it won't be 10 more years. These guys are very good at kicking the can down the road. But my ultimate goal with crypto was always to acquire real assets. That was the only goal that I ever had. And I'm reaching a point where I'm worried that the acquisition of real assets is going to become difficult. That there could be a situation in the future where these cryptocurrencies, no matter what their value becomes, that they will not be tradable for real assets. That real assets will still be unobtainable, regardless of what the phony market prices are. It will simply be unattainable. And we're seeing that right now with platinum. It's becoming very difficult to buy physical platinum. And I worry that it will become more difficult. It was quite alarming at the beginning of this year, around March, with the viral outbreak. It became almost impossible to get physical delivery of things like gold and silver. It was almost impossible for a period of time. And at that time, I figured that it was temporary, and it was temporary. Metals are now deliverable now. But demand remains strong, and the risk to reward balance right now of gambling on cryptocurrencies, which they're a cryptographic-based casino, in my opinion. The benefit of making money there seems to be, in my opinion, somewhat outweighed by the risk of not being able to accumulate real assets in the future. So it's an equilibrium point that, to me, has been breached. The reason I wanted to make this video is because I talk a lot about cryptocurrencies, and I try to help people who are trying to make money. I try to help them make money. Sometimes we succeed, sometimes we fail. You can't win them all. But at this point, I think it may be worth considering it may be worth considering the path that you're on and why you're doing what you're doing. Cryptocurrencies are probably inherently valueless. Disregarding government banning, disregarding hacks, disregarding power grid failures, disregarding electromagnetic pulse weapons, disregarding solar flares, disregarding all of these obvious vulnerabilities that cryptocurrencies have, they're still likely to be inherently valueless, mostly due to their ability to be forked. That's mostly why. And the true power of a cryptocurrency comes from its network. But the people are only a part of that network due to the unspoken promise that they're going to get rich quick. And as soon as a new technology, a superior technology is released, the dream of getting rich quick may be tarnished, because logically you have to move to the technologically superior currency. That's the reason why people got in the first place, right? Maybe this makes sense. Maybe it doesn't make sense. But I just wanted people to know where my head was at.